quant funds are based on quantitative analysis. Managers build computer-based models to figure out if investments are attractive or not. After all, if computers can beat world-class chess champions, shouldn't they be able to beat the S&P 500? We have one guest who has. Chao Chen is the portfolio manager of two Morningstar-rated 5-star quant funds. The TFS Market Neutral is a long-short U.S. equity fund, and the TFS Small Cap is long only and is up more than 53% year-to-date. James Altucher joins us again. He, of course, is a quant guy, and he's at stockpicker.com. He's their managing editor. Thanks again for joining us. Chao, I want to start with you because we had James on a little earlier. The question I want to know is, right now, what are you overweight in your models?
Well, Mary, thanks for having me on the show. In general, our fund doesn't take big position bets in whether market direction or sectors. We're slightly overweight basic materials and utilities, and we're underweight consumer goods and financials.
Okay, so what does this tell you? I mean, why is your model choosing this particular weighting?
Well, I think at this time it makes sense, and it's consistent with what most people have been hearing and saying, and that is that the economy seems to be in a recovery, but it is generally believed that consumer spending is going to be weak, and also bank assets still have more losses to come.
So that's the underweight financials and consumers. James, I want to talk to you or ask you, because you follow the hedge fund industry and quants in particular, what strategies are working better than others right now?
Well, right now the best quant approach has been to take the stocks that have been utterly crushed and have high number of short sellers and go long those and short the stocks that have essentially, very little short selling. So in other words, you're actually going long the garbage companies and short the quality companies, because that's the trade that's worked over the past few months. And
those companies would include, last time I checked, AIG, AMBAC, and MBIA. These are three stocks that have big short interest, and they have been on a tear lately.
Sure, AIG, Fannie Mae, Freddie Mac, these have been heavily short. I mean, AIG was 25% short coming into this week. All
right, we want to bring in Paul Schatz, of course, president of Heritage Capital, who was with us earlier. Tell us why you don't depend on quants to build your portfolio. It's hard to argue with the 53% return that Chao has been able to deliver to his investors.
No, and I think the TFS guys have done a wonderful job over the years, and I commend them. But my comment is, I don't think you can pick any one single strategy and say that's the end-all, be-all for investing over the next 5 to 10 years. Does quant belong in a portfolio? Sure, for a piece of your portfolio, and a couple of our programs are quant-based. But I think like anything else, like portfolio insurance before the '87 crash, and index arbitrage, there are always these things that come in and out of vogue that if you put all your eggs in that one basket, like we saw in July of '07 when the quant funds had their mini blow-up, the investor gets hurt. I think you need diversity of strategies, diversity of asset classes.
Chao, what's your response to that? Wouldn't you want someone to give all your money? Don't you have that kind of confidence in what you can return to them?
I would love it if everyone gave me all their money. But I think Paul's exactly right. Actually, the appeal of the quant funds is that they diversify you away from the market. And our funds are managed such that the return stream that we get is uncorrelated to that of the market. So he's right. You need to diversify it, and you need to invest some of your money in the market and some of your money in alternative assets like quantitative funds. And also, to his point of not investing in only one strategy, and that's exactly what we do is that we diversify across many strategies, and we're continuously developing different strategies.
All right, guys, I want to thank you very much for joining us.
Thanks.
That wraps up this segment. Options Actions, you want to keep it tuned here on CNBC, because remember, it's coming up at 8.